Ethereum, the rocket has taken off. It has launched. It's made a bullish move. What should we anticipate next? Because we know Ethereum is a powerhouse project. DeFi massively relies on Ethereum as a blockchain. But what is the price action likely to do next? So if you like today's video, like, subscribe, hit the bell notification. Today's one that you do not want to miss, because it's some valuable insights. If you don't know me by now, my name is Jagir. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. I've been featured in the best-selling book, High Probability Trading Strategies, back in 2008. I've been trading currency for over 15 years, but now I exclusively focus on crypto, blockchain, because I love it. So if we dive straight in. So on July 21st, I released a video on my Ethereum analysis. And what you saw was, we just said, it looks like it's doing a wave 4 in the form of a wave A going down, a wave B, and then a 1, 2, 3, 4, 5 of a wave 4 of a C. So of a C of a 4. So we're basically saying that in this zone, we should anticipate a low coinciding with this momentum reversal when this blue line exceeds the red line, and then we should see a massive surge to the upside. Hence that red arrow, right? This was only, 10 days ago? 10 days ago. And it was just on the money, right? On the money. Look at this. Boom. Blue line goes over the, let's just draw an arrow so you can make sure you see what I'm talking about. Down here, this blue line goes over the red line. Boom. Massive way to the upside. And it was just brilliant because the price action just took off. Look at that. Right, pegged it right down to here, because that's where the video was on that day, saying right down here in the zone, we should exceed this low. I was anticipating it going slightly lower, but we should exceed this low is what we said. And if it does, we should find a close, and then the market already takes off, and we want to close above this wave 4 high. And then what we saw was, if I go back to the live chart, is we got the reversal. We did close just beneath this over here, and then the market just took off, And this is what we call, you've probably heard me say it a few times now, an overbalance of price. Why? Because this movement to the upside is bigger than this previous move to the upside. This previous move to the upside. This previous move to the upside is greater than, like it's greater than. So it's greater than any previous move to the upside since the end of wave 3, since May 11th. That's what you call an overbalance. Like that's big time. That's big time news. That just tells us straight away that buying has, the buyers have overtaken the sellers. Now there's been a resurgence, massive resurgence and exponential growth, or boom, to the price action. Also time. How long has the market been moving up for? So if we just do it as a visual, if we just take this low and just drip roughly where it is currently today, or just the day before, it's longer than this amount of time. The amount of time it went up from here to here is longer. Also here, look, the amount of time it went up from here to here is longer. So it's longer in both time and price. Time and price. And another way of visually seeing this, because this is valuable information, because this is telling us early on that the psychology, the trend looks like it's reversed. If we draw this as a box, which represents time and price, you can see that the box is bigger than any other, right? And then if you want to get it even clearer, you can see this one's probably the biggest. If we draw another box representing this box, even if we go here and here, we can see that this comfortably fits into this box, right? So that's the first major indication that we have a reversal on our hands, and that we're likely that this is the end of the wave C of a wave 4. That's big news. That's big news. Why? Because if that's the case, we're going to zoom in now. If that's the case, then that means this low should stick. We shouldn't go below this low. Now, I've still got a question mark on this wave 4, because even though it's a massive move to the upside, we're not out of the woods yet, but it's the first major indication that we are. So this low should stick, right? We shouldn't see price go below this low. If we do, and it is possible, doesn't mean it's impossible, because if massive selling happens, we got EIP 1559 launching in the next, well, I think it's tomorrow. It's tomorrow, 4th of August, tomorrow. And if that launches, I don't know, there could be a problem with it. There could be, I don't know, it could be so many different things, and price can go down. But the probability states that we may get a correction, and that's what we're going to look into more detail now, but we shouldn't go below this point. If we do, it invalidates this count, and we need to reevaluate. We need to reevaluate. So we're in the probabilities game here, not the certainty game. We want to have an opinion of the market so we can make objective decisions, but knowing that we could be wrong, right? That's important to know. We're not forecasters for the sake of forecasting. We're just saying, look, the probability, the psychology of the market shows that the buyers has overtaken the sellers, the biggest move that we've had in a very long while. And typically what happens is we should get some type of pullback and then movement to the upside. So that's what we're going to focus on for the rest of today. How amazing is that, right? Massive move to the upside. I was expecting it to maybe hover around 2,300. It went as high as 2,600. If we look at the candles, you'll get the highest range. What was the high? The high was, according to this data feed, 2,699, pretty much 2,700. How amazing is that? Amazing. But what should we anticipate next? Is now the right time to buy Ethereum? Well, let's have a look. So we only need to jump into a lower time frame. So I'll move this back to a line chart. So a couple of things to note. Weekly in the top left. Weekly in the top left is bullish in terms of the indicator, but the daily momentum is bearish. See, the blue line has gone below the red line. That says the price action should be sideways to down. Now, before I jump into the lower time frame, just a quick reminder. Let's just quickly do this because some people don't get this. If I just draw this like this, you'll see why in a second. What we're using the momentum indicator for is to help us see when are the highs and lows likely to occur. Not guaranteed, because momentum indicators by themselves are useless. But combine them with pattern, Elliott wave patterns, and Fibonacci price, then all of a sudden there's three things telling us that the market is likely to reverse. And as you can see, this wave A low coincided with this momentum reversal. This wave 3 of a C wave here coincided with this low, and this wave 5 of a C of a 4 coincided with this low over here. So that's what we're using the momentum indicator for. And the reverse is true. For these peaks, it tends to coincide nicely with these momentum reversals. So this momentum reversal, combined with what we look at in pattern and price, tells us that the next few days, maybe a week, should see sideways to down before we see a continuation or potential continuation. Because, you know, it bothers me a little bit when people think this is certainty, like 100% guarantee. No, it's not what we're saying. Not what we're saying. It's not about being right or wrong. It's about probabilities and then making objective decisions based on probabilities. And if you got the probability on your side over the long term, you may take some losses, you may take some break evens, but overall you should be up and up big time, especially in the crypto markets. So let's jump into an hourly chart, right? I'm going to dive into this hourly chart. I'm going to zoom into this part here. In fact, shall we do it on a, yeah, we'll do it on an hourly chart. We'll do it on an hourly chart. Let's just get rid of this. We can, just going to clean this up for a second. Yeah, let's just do it like this. Boom, boom. Just going to zoom in a bit more. All right, so here's the name of the game. Around 50% of the time, you'll see clear Elliott wave patterns. Very clear Elliott wave patterns. And we've experienced they get clearer. But the other 50% of the time, there's not yet clear Elliott wave patterns. Here is relatively clear if you've got experience. So that's where you're going to lean on me, right? So we're going to go, this looks like a wave 1, a wave 2, a wave 3, a wave 4, and a wave 5. That's what I'm seeing. It's not as clear, but it's clear enough. And we're going to click this as, we'll leave it on the intermediate count because we're looking at an hourly time frame. Then we want to look at this part of the market here, because we ideally want to get a wave count on at least 2 degrees. 2 degrees. What does that mean? 2 degrees. Well, with this wave 5, this typically breaks down to 5 waves. And when it's clear, we want to leverage that information. Now, it's not that clear, but it's clear enough. It's clear enough for us to see that this looks like a wave 1, a wave 2, a wave 3, a wave 4, and a wave 5. Now, sometimes it's clearer than other times. And again, if you're not experienced, you know, this probably wouldn't be clear. But it's relatively clear. It's relatively clear. And then what we can do we don't need to do another one. That's more than enough for the purpose of what we're looking for. So what we're going to now look for, hopefully that makes sense to you, by the way, is we want to do 2 Fibonacci price projections. The one we're going to focus on is this feature here. We're going to click on this and we're going to use a tool called trend-based fib extensions. Trend-based fib extensions. And the number that we want is 0.618 and 100%. Now, I'm going to draw this first because sometimes I do it too fast and I lose people. So what I want to make sure is what we're going to do here. This is one of the major ones to measure a wave 5, end of a wave 5, highly probable end of wave 5. You measure the beginning of a wave 1 up until the high of the wave 3. So we're going to measure this. And then we're going to take that measurement and project it forward from a wave 4 low. Yeah. And this represents 100% of wave 1 to 3. And we want to project forward 62% and 100%. So this is what this tool allows us to do. If we click this, we're going to measure the low over here. We're going to measure this wave 3 high. And then we're going to project it forward from this wave 4 low. And now we need to select the numbers. The 2 numbers that we want, like I said, is 100% and 62%. And what you'll notice, look at this. The arrow is the 100%, and then 62% of the arrow is this green line. Most typical is the 62%, and the maximum tends to be the 100%. And you can see that this wave 5 is in that 62% range. Now, we could do this ahead of time. This is a bit in hindsight, just because it's just the data is what it is. But if the date was down here, we could project in advance. If we said this looks like a 1, 2, 3, looks like a 4, and it looks like a wave 5 is forming, we'll only probably have done it if and when this high would have got taken out in reality. So when the price would have done maybe there, or definitely when it was around here, we could have projected in advance. Our typical wave 5 is 62% to 100%. So we don't need to concern ourselves with selling or any downside movement until at least the 62% is reached. And once we reach the 62%, we go, okay, now we want to be on high alert. We might be on a shorter time frame reaching this wave 5 high, a wave 5 over 5. So now we've got this count, 1, 2, 3, 4, and we look like we're forming this wave 5. So what we just did, we can do the exact same thing, but now on a lesser degree. What does that mean? Well, now we're going to measure this wave 1 low all the way up until this wave 3 high, and it'll be represented by this limb here. And then we're going to project it forward from this wave 4 low. Right? And typically is 100% to 62%, 62% to 100%. So we do the same thing, click. We're going to measure this, boom, boom, and then measure it from this low. So now what we have, if we get rid of this lower one, because we've already exceeded it, we have what we see as a price cluster of 2 degrees of counts. We got this wave 1, 2, 3, 4, 5, this move here, and then we've got this wave 1, 2, 3, 4, 5 of this move here. That's what you call 2 degrees of wave counts. And then we've done 2 degrees of Fibonacci, which give us these 2 numbers. So now when you get a cluster, it means it's the more highly probable zone. So we can get rid of this one because it's a real outlier. There's a few other ratios that we can do, but I just want to keep it really, really simple for today to say, okay, we're in this price zone. We've got this pattern, 1, 2, 3, 4, 5, and a 1, 2, 3, 4, 5 over 5. Okay, so now combine that with, if we just go back to the daily chart, a bearish momentum reversal, pattern, 1, 2, 3, 4, 5, and 1, 2, 3, 4, 5 of 2 degrees, and Fibonacci price cluster. There, you got 3 strong things that saying, hey guys, it's looking like it's a bit overbought right now. We're probably going to see a correction before we see further upside movement. So this is very impulsive, and then we should expect a correction. So let's just get back to today's data. Let's just let it unfold. This is where we are today. So now we're going to project in advance. So first we have to make a decision. The decision that we're going to make is, and I'm going to put a question mark here because it's important. Some people just get it wrong. They get the thinking wrong, and it's annoying, the low level thinking that some people have. Either just not educated, or they just, I don't know, they're just too precious about their thoughts. I'm not precious about being right or wrong. We're looking at probabilities here. We're rolling dice, but with high probable dice. The dice are in our favor. So what we're saying here is this looks like an initial 5 over 5. You go 5 over 5 over what? Well, it's actually a 5 over 5 of what looks like an initial wave 1. Right? And then we can go higher up, a wave 1 of what? We can kind of look into that because now we know, we kind of got a picture of what Ethereum is doing right now. But for now, for this chart, this is important. We've got a 5 over 5 over 1. Right? It's really, really important because it's the first trend reversal that we've got from this big correction. So we're saying it's from a wave 4. So what typically happens after a wave 1 is complete? What typically happens? Well, you get a correction, you get a wave 2. So we have some Fibonacci time and price, especially price. We're going to focus on price today. Zones that we can project in advance now. Typical correction, we're going to measure this low. So what we're going to do here, let me draw it here first. Because again, I want to make sure you get this. Because sometimes you can just use this. You can use it on TradingView, or you can even use it on CoinMarketCap. So you've got a TradingView button. We're going to measure this low to this high. And then we're going to retrace back 50%. And we're going to use another ratio called 62% or 61.8%. And then another ratio, which is going to be 78.6%. So we're going to have 3 ratios. Let me get rid of this as well. Get rid of this one. Cool. That's what we're going to do. So we're going to measure this and we're going to retrace. So it's called a retracement. So we're going to click on this retracement tool. So if you just say clear, it's called Fib retracement. We can click on that. So we're going to click on this bottom. We're going to click on this top over here. And then we're going to select these ratios. So the 3 ratios that we want are going to be 50%, 61.8%, and 78.6% retracement. They're the 3 numbers. So we've got arrow 1 represents 50%. You know, it's obviously guessing. So this is 50%. Let's see how close I was for 62%. Not that far off. And then a typical maximum of a wave 2 is 78.6% retracement. Yeah, makes sense? Right, so we measured it from the bottom to the top and then retracements back down. Now, at the moment, we don't know which one of these 3 is likely going to be where the price comes, but they're the 3 typical zones. Now, I'm actually going to just pull this over. I like to pull it over like this so we know what we're playing with and where we're playing. As the market unfolds, we typically expect 3 waves. 3 waves. Let me make sure this is clear. And this is psychology, guys. This is psychology reflected in the price. It doesn't matter what's happening fundamentally short term. Buying and selling pushes price up and down. EIP 1559 is really positive, but that doesn't matter because fundamentally Ethereum, think about it, has been getting better and better and better with more and more projects launching on Ethereum over the last few months even, but the price has been going down. What's driving that downward price? It's just selling. People just selling, right? And it's normal profit taking regardless of the utility of the token. So what should we anticipate? Well, we always anticipate a minimum of 3 waves on a correction. Minimum of 3 waves, right? That's the first thing. So what we're going to do is, let me draw it out for you. So it looks like we made the initial wave 1, wave 2, looks like a 3, 4, 5. And you go, yeah, but you just said 3 waves. Yeah, but this is a wave 5 of the first wave. Yeah, typically you'll get what looks like, this is turning into a little masterclass here, by the way. I'm not planning on going into so much detail, but I think a couple of you asked me a few questions. I thought you might find this helpful. This is actually a wave 5 of a wave A is what we should anticipate. Then we expect a wave B, and then we expect a final wave C, something like this. That's what we're actually anticipating for Ethereum. That's what I'm anticipating. And we can see this part is forming nicely to this. So what does a wave B look like? A wave B looks like, it typically breaks down into 3 waves, and A, B, C, something like this. And then a wave C often is very similar to a wave A. You just get a nice price movement to the downside, you get a correction, boom, boom, boom. Boom, it won't be that steep. It will be more like this. Let me draw it like this, because this will be more like this. Yeah. Let's try this. be something like this. It'll be something like that, right? So that's what we should anticipate. So we can do a bit more analysis now. Again, I'm now forecasting. We're way too ahead of ourselves to say this accurately at this point because the data is only up here. We're only here right now. So I'm just kind of more teaching this as a lesson to go, this is what typically happens from a psychological perspective. The markets get fearful, they get greedy, and then it's fear and greed, optimism, pessimism, and there's this, you know, thing that just keeps moving. But this allows us to measure the market. That's what Elliot Wave did. Elliot figured out that Fibonacci's ratios apply to the markets and human psychology, and they often, 50% of the time, unfold as predictable chart patterns. And when we see that, we want to take advantage of it. So what I want to show you is a couple of things. This is a bit more advanced, but typically, this is important though. It's important if you can do this. I'm going to use something called trend-based fib time. Time jigger. What? I've heard about fib price, but what about time? Okay, you can actually, the same thing that happens with price retracements and extensions happens with time also. So the typical time it takes for a wave 2 to correct. So you measure wave 1, and it takes 3 clicks. You click it twice. Minimum time is 50% of wave 1. Minimum time is 50%. Typical maximum is 100%, and the typical maximum, there's like a common maximum and there's like an extreme maximum, is 1.618. So why do I show you this? Because if a market hasn't done at least 3 waves and it hasn't passed the 8th of August, even if it's in this zone, we can assume that the correction is not complete, because more often than not, it passes 50%. The absolute minimum is 38.2%, which is related to the golden mean of 1.618, right? That's the absolute minimum. Here's the typical zone that we want to see the price exceed in terms of how long the correction goes on for. Here's the typical maximum, and here's the absolute maximum. But, you know, we don't need that. That's more than likely not going to be the case. So we can leave that for now, unless. And what will happen is, as this price unfolds, let's just say this happens and then this happens as we're anticipating. And let's just say the market is now at this phase, and it may come down, but let's just say it's at this phase. At this point, we can do some really cool price and time analysis. I'm going to do one for you. Again, this is just total an example now. It's theory, like, because we haven't got the data yet. But what we would do normally is we'll measure this wave A and we'll project forward from this wave B high. And a typical wave C is 100% of wave A, and we'll get a cluster similar to this. And then the time taken for a wave C to form, more often than not, is actually the same time that a wave A is taken. So we can measure wave A, project that time forward. Going a bit faster now, but I just want to kind of show you the level of analysis you can do. And then we're going to have this time and price zone. So let's just say we got rid of this one. This is the typical zone. We get rid of this one as well. This was the minimum. So what we have here is this really narrow zone of saying, right, the wave C should complete in this zone. And if it does, what tends to happen next is a continuation of a wave 3. That's important. So hopefully that's made a lot of sense to you. Again, just note, this whole section is pure just forecasting for just the sake of teaching. But where we are right now is Ethereum looking bullish. We've had an overbalance in time and price. It's looking healthy. Let's just jump back into the daily chart to wrap up. This is the stuff that I just drew on the 1 hour chart, but you can kind of see what the anticipation is going to be. A bit of up and down movement, but in this kind of zone, if this ends up being the information that we can count on as of today, let me just delete all this stuff now. Just delete, because this is all theory stuff now. Actually, we can keep this one. Is what we can say is, let me get rid of that as well, is if this is the wave 5 of a 1 high, if it ends up and the market doesn't go higher, we should anticipate a correction at least to 2,200, and the maximum should be in the range of 1,928. as long as the price doesn't go below here. That's the most probable. And the typical minimum time taken for this correction, I think we said 8th of August, but let's just have a look again. Yeah, 8th or 9th of August, right? So these are now valid. And now as the market unfolds and gives us more data, especially if it unfolds in a three-wave chart pattern, then we can make some really objective, powerful, high probability decision making. So there you have it. That was more detailed than usual. That was like a little mini masterclass in Elliott wave theory, Fibonacci, practical, time analysis, and we even tied in the momentum. And then when you got a confluence of events of 4 things, the probability of it reversing at that point is very, very high. Very, very high. You're beyond being the casino in terms of where the odds are in your favor. And that's what we're always looking to do. Minimize the downside and maximize the upside. So if you like today's video and you want more detailed stuff like this, let me know. Like, subscribe, hit the bell notification, and comment. Let me know what you found most useful today. Was it Fibonacci price? Was it Elliott waves? Or was it Fibonacci time? Because most people don't know you can use Fibonacci with time. So let's finish off with a quote. I'm pulling out this old school book that I used to read back in the day called Think and Grow Rich. It's a gem by Napoleon Hill. It's all about the unconscious. And in the beginning of chapter 3, I just want to read this. It says, auto-suggestion, the medium for influencing the subconscious mind, the third step to riches. The medium for influencing the subconscious mind. Now, it's important. Most people don't realize, just because no one really teaches it openly, unless you've done some degree level stuff or advanced level stuff in psychology, that we operate 95% unconsciously. And that's really important when it comes to money. Why? Because it means actions that we're taking, we're running 95% unconsciously on, and more often than not is on emotion, fear and greed. And often, if we are hardwired to lose money or to be broke, and that can be coming from our childhood, it's difficult to make money consistently. So this Think and Grow Rich, I actually recommend this book. It's a good book. It's a good starter book to kind of go, hey, how can I reprogram my mind so what I consciously want is lined up with what I unconsciously want. Unconscious and unconscious. And unconscious is the puppet master and the conscious is the puppet. And you want to be manipulating and kind of really influencing the puppet master level, which is the unconscious, which influences your life. Hopefully that makes some sense, because psychology is reflected in the price. That's what we're looking at. But psychology is in your mind as well, right? And the actions that you can take when you see this information. So like, subscribe, hit the bell notification. Have a brilliant day, and I will see you very soon.